Let's bring in Larry Shover, coming to us obviously from the CME in Chicago. He's the Chief Investment Officer at SFG Alternatives. Larry, thanks very much for your time today. Talking Fed, I know it's one of your preferred topics. September announcement for an October tapering?
I think so. That seems to be the consensus. When you look at the jobs report that's coming out this Friday, I think anything north of 150,000, right now consensus seems to be about 180. That's going to start dialing down. September announcement, October tapering, probably about $10 billion per month. It's going to be geared largely towards treasuries, at least to start.
We're just hearing from Matthew Johnson, my guest host today, suggesting that they will taper because they've already had the markets, they primed the market for it. We've already seen the market take an awful lot of their medicine, and to not taper would unwind, if you like, some of the work that they've done. But what if the data doesn't support it? I thought it was all meant to be predicated on the data supporting tapering. If the data takes a turn for the worse, then by their own admission, they shouldn't taper.
That's exactly correct. I mean, but I do believe they've done a lot of work. The equity market has spent 6 months embracing the concept that we're going to taper. It's going to be very small. People realize that he's not putting his foot on the brakes. He's just taking his foot off the gas a little bit. And our balance sheet's still going to swell up to $4 trillion. So there's still a lot of work to be done. But that said, I think clarity will come. I mean, if the data points start to turn south, I mean, they'll put the foot right back on the gas. We're on uncharted waters as it is. What the heck of going on uncharted waters for a few more months?
Larry, do you think that when the Fed tapers, that what we'll see is Treasury yields may actually start to decline somewhat because the uncertainty will come out of the Treasury market?
Well, I think right now, with the market assuming about a $10 billion a month taper, that would put the 10-year yield at about 265. Right now we closed at 286 for the 10-year. I think that 20 bips or so tends to be drama, tends to be risk premium right now. So to your point, yeah, I think we could see rates come off just a little bit, although it seems to be, when you look at the options market, the bigger picture seems to suggest that we're going to see 3% sometime this year.
Do you see that having adverse impacts in sections of the US economy, particularly around housing, which has been so, I suppose, such a key fundamental target for the recovery?
Oh, yeah, absolutely. I mean, going up above 3% is going to have profound effects on our economy. However, it really depends on why it goes up to 3%. I mean, if our data points are getting better, if our jobs numbers are getting better, and our economy can afford, a 3% 10-year yield, then it's not going to skip a beat, because really our homes are still very affordable when you look at history of the last 25, 30 years.
Your thoughts on that, Matthew?
It does seem to me that there's some tightening. There's some impacts of the tightening already coming through. There was a disappointing new home sales report a little while ago. Mortgage applications for purchases have been down. Refinancing, which is one of the ways the US consumer is taking cash out so they could go spending. Refinancings is dropping. So it does seem that there's some automatic tightening coming through. But and they're one of the reasons why I think that maybe long-term yields, after going perhaps above 3% in the run-up to the taper and with the appointment of Summers, may come down again. But Larry, I'd like to ask you, what do you think about the Fed chair and the uncertainty around the appointment? Do you think it matters for Treasury yields?
I think it does. I think that's part of the drama, part of the risk premium that's in the 10-year yield right now. I mean, people were expecting it to be Yellen even 4 weeks ago. Now the needle has turned towards Summers. People are a little bit worried about him. He's a Washington White House insider, and the story on him is that, yeah, he's like Bernanke, except the fact people somehow are afraid that he's going to taper sooner than later.
Is it being a little bit diplomatic, Larry, to say they're just slightly worried about him? My understanding is there are people running around the halls of Congress absolutely dreading a Larry Summers appointment to the Fed chief.
Yeah, well, I think that's because he's an insider, maybe because they know him too well. Wall Street doesn't seem to be overly concerned. At least the equity market does not. Fixed income market does a little bit, although interest rate volatility has simmered down a little bit. But yeah, I mean, if Yellen was the appointee and everybody knew it, I think we'd see yields lower than where they are today.
Matthew, you're sounding like you think Summers is going to be appointed. Why the change? Yellen seemed a shoo-in going back a few months.
Well, I read the newspapers just like everyone else. So there's when Ezra Klein tips Summers for the job, then I think Summers is going to get the job. So it was the Ezra Klein's article in the Washington Post. I think is it where Ezra Klein publishes?
I think so. Do you think he'll make a good one?
Look, what I think is that Bernanke is going to start looking like the odd guy out amongst Fed chairs. Volcker, Greenspan, and Summers were all very strong personalities who dominate. And I don't know if Summers will, but Volcker and Greenspan both dominated their committees, and Bernanke hasn't done that. Bernanke's been a very collegiate Fed chair. Tried to bring everyone along for the ride. Summers isn't famous for doing so, so I think it'll be more a return to normal service for the Fed with a powerful leader who's in a position that's probably more powerful than ever. It'll definitely be interesting for the rest of the world with Summers in the job, because I don't think he'll have as gradual or collegiate approach as Bernanke.
Larry, more broadly, we've seen global reads on manufacturing very positive, underpinning global growth confidence. Are you confident that can continue, and does that flow through itself into US optimism?
Man, that's a loaded question because, boy, I'm so happy to see the European numbers like climbing out of recession. It's good to see China bounce back. And look what happened to the Aussie dollar last night. All that's wonderful, but it's still so very, very fragile. And on the other side of that, U.S. numbers have deteriorated on the whole a little bit. And the emerging markets are still a mess. So there's a lot of moving pieces. I mean, yes, it's great to see Europe climb out a little bit, but I think it's very fragile, way too early to tell.